Welcome to the Deep Dive. We take the sources, we distill the insights.
That's the goal.
Today we're getting into Badger Meter's second quarter 2025 earnings call. They reported another quarter of record sales. Pretty solid financial results overall.
Yeah, showed some real disciplined execution, I thought. And you can really see the durability of demand in the water industry.
Even with those challenging comparisons from last year, right?
Yeah.
Which we'll get into.
Exactly.
So our mission today, unpack these results, understand the strategy behind them, and give you that nuanced perspective you need as an experienced investor.
Let's do it.
Okay, let's start with the headline numbers. Q2 2025, total sales, $238 million. That's up 10% year over year.
Pretty robust.
And if you take out the SmartCover acquisition, organic sales growth was still, a solid 5%.
Yeah, still positive.
Drilling down a bit, utility water product sales increased 11%, or 6% organically, again, taking out SmartCover.
Right.
Gross margins expanded nicely, 170 basis points, up to 41.1%. So still trending above their normalized range.
Yeah, that continues to impress.
Operating earnings up 8% year over year, $44.9 million.
Yeah.
Consolidated EPS, that's earnings per share, came in at $1.17. That's up from the $1.12 in the same quarter last year.
Decent jump there.
And importantly, free cash flow was strong, $40.6 million. That's a 19% increase year over year.
Wow, okay. That cash generation is key. And what's really compelling about those numbers, like you mentioned, is doing it against what they call difficult comps.
Right.
Q2 last year was exceptionally strong. So achieving this kind of performance, well, it really speaks to the resilience of the business, doesn't it?
It does.
For an experienced investor, it signals that, even when the bars sit really high, they can still grow, they can still maintain profitability.
Shows that underlying demand is just there.
Exactly. It points to this deeply embedded demand for what they do, almost regardless of, wider economic swings, really reinforces them as a critical infrastructure play.
That resilience is definitely the story here.
Yeah.
Okay, let's unpack those sales numbers a bit more then. Core sales growth, as we noted, moderated from those, frankly, quite high double-digit levels we'd seen recently.
Right.
So on the surface, someone might just look at that and think, slow down. How should we really interpret that moderation? What's the real picture?
Yeah, that's a fair question. Look, that moderation was mostly just a function of what management called a high watermark comparison from Q2 2024.
Okay.
Basically, they were up against a record quarter last year, so naturally the percentage growth this year looks a bit less dramatic.
Makes sense.
But if you dig into it, they still delivered higher sales across several really key areas. Their core meters, obviously, but also their Beacon software as a service, the SaaS stuff, water quality solutions, remote monitoring.
So the higher value areas.
Exactly. High value, often recurring revenue streams. Now, on the other side, flow instrumentation sales were, basically flat year over year.
Okay.
But that wasn't really a broad market thing. It was specific, lower demand in some markets they're sort of de-emphasizing anyway. And that offset the, modest growth they did get in the water-related parts of that segment.
So sounds like strategic focus? Pruning maybe less attractive lines?
I think that's a fair assessment. Focusing resources on the bigger, more strategic opportunities within water.
Okay, the focus on strategic areas. That brings us neatly to their recent moves. Let's talk SmartCover. It's been, nearly 6 months since they closed that deal?
Just about, yeah.
What's the latest on the integration? And maybe more importantly, what's the strategic payoff looking like for this investment? Is it working?
Yeah, the integration seems definitely on track. They're hitting their anticipated sales and cost synergies, maybe even a bit ahead on some things.
Good to hear.
In its first full quarter under Badger Meter, SmartCover actually brought in just over $10 million in sales. And that was above its prior run rate.
Oh, interesting. So already contributing more.
Exactly. And this acquisition, strategically, it's fascinating because it gets them into the sewer line monitoring market, which is still basically a greenfield opportunity.
Right. Very little existing tech there.
Think about it, the digital adoption rate, less than 0.5%, less than 0.5%. Most places are still sending people down manholes, essentially.
Risky, inefficient.
Totally. SmartCover brings digital monitoring to this almost medieval process. So that low adoption rate means the runway for growth is just, huge.
Makes sense.
The company expects SmartCover to be EPS accretive in year 2. And importantly, this isn't just about cutting costs.
Right. It's about growth.
Primarily, yes. The main driver is commercial synergies. leveraging Badger Meter's huge market access, their relationships with utilities.
Okay.
They can now cross-sell SmartCover into this massive customer base.
I probably didn't even know about this tech before.
Precisely. Now, there are some minor secondary cost synergies, supply chain leverage for components like circuit boards, batteries, that sort of thing.
Sure.
But the real play, the big value creation here for investors, it's clearly on the revenue side, taking this innovative solution and plugging it into a global distribution network.
And SmartCover, it's not just a standalone thing, right? It connects to their wider Blue Edge initiative.
Absolutely, yeah. Blue Edge is kind of the umbrella brand.
Yeah.
It unifies their whole suite of beyond-the-meter solutions for water and wastewater management.
So moving beyond just selling meters.
Exactly. It's about becoming a full-stack water intelligence provider. They really pushed Blue Edge at the ACE trade show, that's the big industry event, and apparently the reception was very strong.
Yeah.
They even rolled out a new field app for their Beacon software and something called Cobalt, which uses machine learning for, more advanced insights within Beacon.
AI in water management.
Basically, yeah. And what's interesting from an investor angle is we're seeing more and more RFPs, requests for proposals from cities and utilities, specifically asking for these beyond-the-meter solutions.
So the market is pulling for it.
Seems like it. It reinforces Blue Edge's importance. It signals customers want more than just the meter. Now they want ongoing management, efficiency, predictive analytics. It really expands Badger Meter's market and creates stickier, probably higher margin revenue long after the initial meter installation. It's about that recurring value.
Okay, that pivot definitely has financial implications. Let's talk profitability then. Gross margin's impressive at 41.1% in Q2.
Fantastic.
It really is.
But it was a sequential dip from 42.9% in Q1. What's going on there? Should we be worried about that dip?
No, not really. That sequential decline was pretty much entirely expected. Q1 just had this unique, very favorable customer and product mix that didn't repeat. It's the kind of quarter-to-quarter noise you expect.
Got it.
Despite that dip, Q2 margins still benefited a lot from customers adopting more advanced tech. So higher value software-enabled stuff and their ongoing operational excellence work in manufacturing.
And pricing.
And pricing, yes. They put through some recent price increases, which helped offset some tariff-related cost pressures they're facing. The tariffs, still a factor.
Still a factor. The trade environment is, fluid. Tariff uncertainty continues. Like copper prices spiked recently because of tariff talk, even though Badger Meter mostly uses recycled brass.
Right. Ripple effects.
Exactly. And that ongoing uncertainty is why management's keeping their normalized gross margin target at 38-40%, even though they've been running above 40% lately.
Prudent.
Yeah, it's conservative. Suggests they're ready for bumps, but still optimizing. Performing above that long-term range consistently shows real pricing power and efficiency, though.
Okay, speaking of costs, let's look at SG&A. Selling, general, and administrative expenses came in at $52.9 million. That's up about $9.1 million year over year. What drove that?
Right. So that increase was mainly driven by two specific things. First, the full quarter impact of having SmartCover on the books.
Okay, makes sense.
That includes, importantly, $1.6 million in intangible asset amortization. Now, for investors, it's key to remember this is basically a non-cash accounting charge from the acquisition. It hits the P&L, but not operational cash flow directly. It's expected recurring post-acquisition.
Got it. Non-cash. What was this second factor?
The second was a unique $1 million deferred compensation expense tied specifically to the stock price increase during the quarter.
Oh, okay. One-off, basically.
Pretty much. Yeah. So if you strip out the acquisition impact and that unique comp item, the sort of organic SG&A increase was more like $2 to $3 million year over year.
And what's that from?
That's the ongoing strategic stuff, investments in software, R&D, and really driving adoption of those newer tech solutions, especially Blue Edge.
Investing for growth.
Exactly.
Yeah.
Management was clear that their ability to leverage SG&A over time, grow sales faster than these costs, that remains intact. It's not uncontrolled spending, it's targeted investment.
Good clarification. Now, management was pretty open about the, let's say, uneven nature of their business, quarter to quarter, project timings and all that. Very lumpy sometimes.
What does that mean for Q3 2025 specifically? And how does that fit into the bigger picture, the longer term outlook?
Yeah, they are guiding for a sequential decline in absolute core sales in Q3. So dollar amount lower than Q2.
Oh.
But, and this is crucial, it's not about demand weakening. It's purely timing. A bunch of big AMI projects wrapped up in Q2. New ones are lined up, but they start at different times.
Project lumpiness.
Exactly. But equally important, they still expect year-over-year sales growth in Q3, even excluding SmartCover. So the underlying business is still growing compared to last year.
Okay, that's key context.
And management really doubled down on their conviction in high single-digit revenue growth over the long term. That multi-year view hasn't changed. It's backed by strong secular trends in water infrastructure, solid customer demand, a good pipeline.
Because water utilities need this stuff. Fundamentally, yes. Water utilities can't really function without effective metering and management. So for investors, yeah, quarters will vary, but the long-term path looks pretty compelling.
Okay. On a broader level, there's been some chatter, some concern maybe, about potential EPA budget cuts, overall municipal spending activity. How does Badger Meter see itself positioned against those potential headwinds? They rely heavily on municipalities.
That's a really important point about funding. Yes, federal funding, state revolving funds, that might fluctuate. But utilities have other ways to pay for things.
Like what?
Well, there are WIFIA low-cost loans, federally backed, still active. Crucially, utilities can and do raise rates on customers.
The direct route.
And they issue municipal bonds for essential projects. But the absolute key takeaway, what management stressed, is this. For a water utility, the meter is the cash register.
Ah, right. Essential for revenue.
Absolutely essential. It means Badger Meter's products, the meters, the software, they are high priority capital spending almost regardless of specific federal funding shifts. They need them to bill customers and run efficiently.
So less discretionary than other muni spending.
Much less. Because of that, the company feels pretty well positioned. They don't expect to be significantly hit by potential federal cuts. Demand and project activity are driven by fundamental infrastructure needs, not just budget windfalls.
Makes sense. One quick thing before we move on sustainability. Increasingly important for investors. Any updates there?
Yeah, definitely worth touching on. They just put out their 2024 sustainability report, and a key highlight was that they actually exceeded their greenhouse gas intensity reduction target.
Oh, nice.
And they raised the targets going forward. What's impressive is they did this while also delivering record financial results last year.
Doing well by doing good, sort of.
Kind of sums it up. It shows their operational focus isn't just financial, it's tied into sustainable practices. That can be a real long-term advantage too.
Okay, great. So let's synthesize all this. We've unpacked the numbers, the strategy, the outlook. What does this deep dive into Badger Meter's Q2 call really mean for you, the experienced investor looking at this company?
Right, pulling it all together. First, strategically, Badger Meter is clearly pushing into these significant greenfield growth areas with its beyond the meter strategy, Blue Edge, SmartCover. That's expanding their market into places with super low digital adoption. Big long-term upside potential there.
Okay, growth angle.
Second, the resilience. The water utility market is inherently stable, critical. Badger Meter is a core vendor in a sector that has to keep operating, making them less vulnerable to economic cycles.
Stability, check.
Third, financial discipline. They're managing costs, expanding margins consistently above their own targets, generating strong free cash flow, even with tariff noise and macro pressures. That execution is notable.
Financial health, yeah.
And finally, that long-term outlook. Despite the Q3 sequential dip due to project timing, management's confidence in high single-digit growth over multiple years seems well-founded given the industry fundamentals and their pipeline. Plus, their strong balance sheet gives them flexibility for more growth, organic or maybe other acquisitions, while still growing the dividend like they have for decades.
Shareholder-friendly, too.
Very. It really looks like a company executing a clear long-term plan with discipline right now.
All right, now, for something a bit different, our outrageous but plausible trade idea segment. Remember, folks, purely for discussion, absolutely not financial advice. We're just thinking creatively here.
Right. Disclaimer firmly in place. So here's a thought, maybe for someone with a longer view, maybe a bit contrarian. You could consider a strategic long position in Badger Meter, possibly using options, specifically to play off a potential market overreaction to that Q3 sequential sales forecast.
Okay, how so?
The thesis is the market might fixate on that short-term Q3 dip, the project lumpiness, right, and temporarily discount the stock, overlooking the bigger picture.
The long-term secular growth, Blue Edge momentum, SmartCover accretion.
Exactly, all those things we just discussed. So maybe something like a calendar spread, You could buy longer-dated call options, say, expiring after Q3 results are digested, maybe Q4 or early next year.
Capturing the potential rebound.
Right, and maybe sell some shorter-dated calls, perhaps around the Q3 earnings, to help finance the long calls, reduce the premium cost.
Interesting structure.
It's basically a bet that the market's potential short-term focused market myopia will eventually give way to recognizing the robust multi-year growth story once the Q3 timing noise passes. It's potentially asymmetric if the market does overreact downwards first.
Fairly plausible, if a bit outrageous. Food for thought. Okay, to wrap up our deep dive today, Badger Meter delivered a strong Q2, no doubt. They pushed forward on those key strategic beyond-the-meter initiatives.
Clear progress there.
And despite flagging that near-term project timing variance, they're holding firm on a robust long-term outlook.
Indeed. It really reinforces their competitive position, their financial discipline, and I think their ongoing commitment to creating value. They're a leader that's clearly evolving alongside the needs of the water industry.
Couldn't agree more. Just a final reminder. This discussion was purely for informational purposes. It is not financial advice. Please do your own homework. Consult with a qualified financial advisor before making any investment decisions.
Absolutely critical.
We hope you found this deep dive useful. Let us know what you think. Send us your questions. We appreciate you tuning in.